Stock market analysis and projections on the S&P 500. Important information. First, please do read this slide. It tells you about our approach to analysis and about how it's best for you to use our work. Always want to just talk about trade ownership, how important that is for you to own your own trades. Stock market analysis, S&P 500, weekly and daily analysis. Plus, I'm going to show you our market condition monitor, and I'm going to show you Apple, which is giving a negative warning on the market. So I think this is really important analysis for you to see. So let's start out by looking at the S&P 500. This is our side-by-side view. On the left side, we have the 10-year weekly we're looking at here. We're looking at a 2-year daily over here. And if somebody is looking at this for the first time, this is cycle analysis. These brackets on the bottom that you see, these half moons, are a drawing tool to help us understand the rhythm or the heartbeat in the market. This is essentially money flow. This is not any kind of hocus pocus. There are cycles everywhere in nature, and if you go to the askSlim.com, to the top of the website front page and click on workshops, there's a free video in the cycle analysis workshop, and you can learn more about it there. For those of you that are Elliott waivers, and I'm not, you got to be looking at this and saying, holy cow, does that ever look like a perfect Elliott wave pattern? That's about all I know about Elliott wave. I'm a cycle analyst, so I don't really look at Elliott wave, but this is a good look at a uptrend that is very clear, with the bear market right over here ending right back over here, and then this rally that we've seen for a good close to a year and a half on the upside. Now you could see these cycle rhythms in here. There's a dominant cycle and there is a half cycle. You can see the perfect half cycles right in here. Now these don't always exactly align. These are average lengths on the cycles. This is the ideal and this is the actual that you see here. So if you see that this is the ideal cycles right in here, and if I had upward energy pushing to the upside right in here and tilting that to the upside, it would look exactly like you see right over here. Upward energy, higher peak, higher bottom, higher peak, higher bottom, higher peak. That's why this was not a surprise. Also, you could see our reversal scout right over here. This is a level 4 study, and this really helps us understand the cycle conditions. And you can see we still have upward momentum, as you see right there, and then this downturn here at the end of the year. These were the fib extensions that you see there. That's these blue areas right over here, 78.6, 100% fib extension that is built off of this cycle right there. 10.9% decline, pretty normal correction in a bull market right over here. And you can see that these yellow zones are where these nesting areas, in other words, the shorter term traders start selling right in here, the intermediate holders start selling right over here. It brings a lot of money flowing out of markets during those periods, as you see right there. And the next one out over here comes out in April, May. Please do watch our special report on the major markets, and I give you a detailed look on the monthly charts on how this all lays out for this year and coming years. So you can see in here that there is a low due sometime right over here in the middle part of January. And this is just a little minor cycle pullback right in here. The daily cycle trough is right around mid-January. I'll show that to you as I move forward right here from this weekly chart to this daily chart. So again, these are the daily cycles that we have in there, and you can see how they line up. Also, this is a different cycle length than you saw on the weekly, but just absolute perfection when you look at that. And that calls for this selling wave that we're looking for. We thought it would be between 140 and 240 points on the downside. This dominant 23.6% right over there aligns with the minor 61.8%. That's that little one right there. Let's take a little closer look for you right so you can see that. And that comes down right over here to 46.30. Let's say the peak right over here was 47.80, so that would be 150 points to the downside there, with an outside chance of it getting down over here. That's 45.36. So I'm going to say the highest probability is the center arrow that you can see right over there, and that's why we put that in there, because that's the highest probability. So it's really made up of two channels, an upper channel and a lower channel. It kind of makes up something that we call the slim cloud, which we'll be working on as a study in the future. And this, you could see the momentum is the slim ribbon right in here. The slim ribbon is a great momentum tool, and on the bottom is the slim ribbon PO. And what this tells you is when there is likely momentum resumptions in a specific direction. And look at these beautiful things right in here, as they were telling you, likely to try to get back up. You could see that right over here. That means that you're probably going to get a little bit of an uptick right here, but still, this is a bit early for this cycle to bottom. So we're still thinking it comes down over here, falls down to about 46.30, and then gets this next rally and probably tests these highs over here out sometime in the early to mid-February period. Then we get into that next period of risk. I'm coming back to the weekly, which then would bring you down after this rally into this bigger period of risk. So this is a rally here in February, maybe out into late February, early March, and then we get into that bigger period of risk over there, looking at the weekly chart. So I'm going to go back to the daily, back and forth, and you can see this probably does not hold the rally that we have today, with the S&Ps up about 30 points right now. Just buying coming in after this decline that we had in here of about 120 points on the S&P 500. This does seem early to me and very likely to give way for about another week to the downside. See these two light blue lines right over there? That is the ideal time frame for the low to occur, or the cycle trough. So that comes out somewhere around mid-January. We'll look for a little bit more on the downside. There's your side-by-side look, as you can see right there. And please do learn more about cycle analysis, again, at our front page. Go to that workshop tab and watch the video in there. You can see what's in our workshop. There are 24 video modules. Took me 2 years to write that and over 6 months to produce. You will learn a ton if you decide to invest in that workshop. So I want to now switch over to something else, because we looked at the S&P 500. I'm not going to look at the other indexes. And if you watch the Future Speak show on Wednesday, you'll be able to see all of the indexes, and a total of 24 different indexes and futures contracts that we do analysis on. But right now, what I want you to see is the Market Condition Monitor. So this is available for level 3 and level 4 members. And right now, this is set up on intermediate. I want you to see right there. Essentially, you can be in the trader version. So it's are you an intermediate, short-term, near-term, which is a couple-day swing trader, or an intraday trader? Intraday is only available for level 4. This is important. You can see in here that the intermediate conditions are still quite positive. Bullish, bullish, bullish. You can see that as these different time frames align in a positive way. You could see that on January 4th, see the downward arrows. They came down from very bullish to bullish. So the intermediate conditions are still good. And this is part of why I believe that once we get this low in the next week or so, in mid-January, then the market's going to go up and test those highs. If you were a short-term trader, and then you're just trading here on a daily basis, you can see that what happened was that this turned to slightly bearish. And it says to you that the bounce that we're getting right now in the stock market is not likely to hold. You notice the diamonds are neutral. So this is telling you that the Dow is the strongest index when you look at that. And then it tells you that these other SPY, QQQ, IWM are more negative when you look at that. If you were just a swing trader over a couple days, you'd use the near term. And these right now are giving you neutral readings because the market is bouncing right now, so there's really nothing right in there. And if you're a little intraday trader right there, the intraday traders, you can see, turn bullish here, but the Dow not getting enough of a bounce, so that is still neutral. So this is fantastic. I'm going to go back to the intermediate right over here, and you can, we have a lot of symbols in here, all of the widely helds that you use, so you can, scroll as to what are the most positive, most negative as far as conditions go. You can see in here the top 4 bearish ones I'm going to show you: Starbucks, corn, soybeans. So we have negative conditions going on in those grains that are falling very hard right there. And just the top 4 here that we'll look at: KIE, EWC, XLV, and Goldman Sachs is the only stock showing up there. And you could scroll down and see which of these stocks are still bullish in here, very bullish, all that great information. Or right over here, again, I'm looking only at intermediate right now, so, and the very bearish ones right in here. So this is an unbelievable application, really. It's got all of our algorithms built in there, and for level 3 and level 4, it's just great. So if you take advantage of our last weekend here for Give the Gift, then you will be able to get this app to have and use, and I think you'd really like that. So that's a look at the stock market conditions. I said to you that I also wanted to look at Apple, which I'm going to do because I think it's giving negative warnings, and I give a nice cycle analysis lesson here when I move from the S&P 500 to AAPL. So here are the Apple charts. Again, we're on side by side right over here, looking at weekly and looking at daily. Let's look at the weekly first. So what I want to show you, and for RV, who keeps these charts up as far as the equities go, and also Katie. Also, you'll note that I also put in a half cycle in there because I wanted to illustrate that for this purpose. For our members, you don't have the half cycle, but you can see right over here where that half cycle lines up, or here. So it's a half cycle. They're showing up as so you have the dominant and the half. This one didn't have any significant dip in there. It was swamped by the upside pressure, so this minor cycle, as they say, went invisible. Little dips right in here is all it could get. And let's see the dominant cycle low here. You could see where the reversal scalp turned up and warned. And I want you to note that I have these little red warning circles right over here. I put specifically on this chart because I wanted you to see where the reversal scalp comes down and warns on the weekly chart that the cycle peak is in place. You can see that right over here. The cycle peak in Apple is in place. There have been downgrades this week. Their revenues have been falling. Their sales are on iPhones are under suspicion. And you can see that this decline right in here is coming right in this minor cycle period right there. So, like I said, the stock market is likely to fall for maybe another week, then have another move toward the upside. Here's that half cycle in Apple that you can see, and what we're projecting right up over here. This is likely a selling opportunity coming up when you see there in that rally. Now, what makes me so negative, other than the fact that momentum on an intermediate term has turned down right over there? That is the daily chart. This is just very important to look at. We're going to look at these periods right in here. And that is, you can see that there was a downtrend in here as I go back to July of 23. And note where this cycle bottomed right over there and how it gapped down through that bottom. That warns that you're in a negative cycle condition, and it is likely to keep falling right through the cycle trough. You can see that. Then the next rally is likely to fail in resistance below this high and then move down again. And that made a lower low, and this one made a lower low. You can see that. This one was so weak that it actually ran long, and this rally in here failed right in the resistance and made another lower low. So you see the gap down and the breakdown right over there, and the slim ribbon turning negative. Look what happened right over here. the gap down, the breakdown. This is exactly what happened right over there. And we are in this declining phase. Now you could see the ideal low comes here in mid-January. That's exactly what we're looking at on the S&P 500, right? And Apple has been leading the way on the downside right now. Also note the slim ribbon PO has turned red as the slim ribbon has had that negative crossover. Look how when it was bullish in here and this was signaling upside resumptions, right there. See where it was negative here and signaled the downside resumption right there? All of that, very valuable. This is a period of risk for Apple right over here. It actually is not really placed correctly. Let's just put it right in there because there's probably a bottom coming in here and then a rebound. Remember we said the stock market would rebound also into February, maybe March. And this is the sell pending area. Once we get where the low is in here, we'll be able to put the resistances. And you get this rally over here into late January into maybe early February. What's the probability of this moving down again below whatever low it makes here? It's extremely high. You see what happened, the big rally, then take out the low? This is a very good shorting opportunity coming up right there. And this is how we use cycle analysis. So you can see this decline right over here, set up these resistances right in here. It got up a little through that resistance that was right there at the 61.8 to 78.6 and then broke down. So you had this little resistance here, never made it through. The slim ribbon provides resistance. The slim ribbon provides support. And if it gets some bounces in here, the slim ribbon is probably going to provide resistance again. It's in some support area right now. This support right over here is 178.5. Probably gets down over there in the next week, tries to rally here into the close to 190 area. That's a pretty good move, right? And then that's the sell and then down. And this probably aligns with that next leg down in the stock market. There is your weekly pattern right over here, and the likelihood of that setup of the second minor cycle and the big decline. Apple looks like it's going to end up after making this sell right over there, coming down here and breaking below 73, potentially getting down to 165. So below 173, potentially getting down to 165. When is that? It's out in May. If you watch my big picture analysis on the stock market in the special report, we talk about the importance of the May time frame. This is really an amazing alignment. Apple is in trouble. Rallies are for selling. I hope that is really valuable to you. You can see how that aligns with the stock market. You can see how that gives you information on the stock market because Apple is the heavyweight in the indexes. And this, I think, is important to you, important to your trading, and important to your investing. I want you to be so unbelievably successful, of course, because your success is our success.